Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, October 3, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, they're still flirting with the same spot, 565.17, that they've been flirting with for the last few days. They still haven't reached that spot. They remain above all the moving averages. The trend is your friend. That's the big picture. Now we narrow it down a little more and you say, all right, what do we have forthcoming? Well, Friday, all of a sudden, we have a phony jobs number. Okay, that's a pretty good excuse to move the tape. So are they going to move it up or down on the phony jobs number? Well, let's take a look at the assessment and see what we have. What's the market been doing? We're going to be the umpire. We're calling balls and strikes. Market made a top over here, another top over here on Thursday, September 26th. And it's been trading sideways to lower in a bullish pullback type of fashion. Why do I say that? Because she's staying above the most recent breakout area. What is that number? 565.17. As you can see, if you've taken the course, Lazy E-mini Trader, then you'll notice she's now all of a sudden in an on-time type of situation. Coming into the phony jobs number, phony jobs Friday, we'll call it. And are we going to see one of these on Phony Jobs Friday? New highs, take off to the upside, floater Friday, finish them really strong into the weekend, fresh new highs. How many times have we seen that before? We've seen that plenty of times before. So yes, that is on the board. What's the other side? The alternative. And we talked about this in the live room a couple of times already. And we're looking at the red line and we're focused on 565.17. And we say, well, they've had now 3 days. They've had 3 different days worth of opportunity to come down and either touch that number, spike that number, and even get below that number. And they've chosen all 3 days to stay above that number. Now, that could be one of those bullish fake out situations. We'll find out tomorrow because they can use the phony jobs number to gap below 565.17. Never actually touch it. Just gap below it and head lower to another place based on the reaction on the phony jobs number. Now, we don't know which number is going to be good or bad, whether there's going to be X number of jobs created or unemployment rate this, and it doesn't really matter. It's good news is good news, bad news is good news, bad news is bad news, bad news is good news. We don't know which one it's going to be, only after the fact. What we do know is there's a data point coming, and it can be an excuse to move the tape. They're at a critical place. They've been pulling back for several days. They're either going to take off to the upside or we're going to end up with a big gap down tomorrow. One way or the other, there's not a damn thing we can do about it right now in the aftermarket session other than trading futures, but we're not going to do that. We're going to wait for the reaction. And for example, inside the numbers, folks in the live room, we're going to be more than happy to trade the reaction. The reaction happens at 8:30 a.m. Eastern Standard Time. We're going to be happy to trade the reaction tomorrow morning during the Friday morning rush hour trading system. We were also having a discussion today in the live room about, hey, what's that number where you would buy the market with 3 hands if they killed it, for example, on a phony jobs Friday type of situation? Well, we talked about the NASDAQ. We talked about the spiders. Let me give you the spider number. For example, let's say they spiked, they got below 560, 559, maybe even down to 558. I think that's where you step in and you play for a bounce back in the other direction. I think that one would be more than a day trading opportunity. That could be swing trade-ish. Write that down, put it on a sticky note. We'll call it 559. It could be 558. It could be 558.22, somewhere in that neighborhood. A pretty darn good spike at that 20-period moving average and a spike of the gap left open from the 18th of September. This is what I'm looking at. Put it on a sticky. What happened today inside the numbers? What happened in the live room? Did anybody make any money in there? Today, a couple of times in the live room, we had what's called the dirty dog trade. What exactly is a dirty dog trade? It's where they come up just short of a number more than once. They don't let you in the trade because you were, meaning me, waiting on the number, not willing to front run a number, and then they absolutely give the trade and then some. That's called the dirty dog trade. We'll get to that in a few moments. You could see we're talking about 565.17, obviously. If she's down there and spiked it, we had some numbers down there. It didn't happen today. We don't need them again. We'll have them again tomorrow. Then we have the flat line, 568.85, and we have 570.25. So they never got to the 570.25. That's the blue line up there. You can see it here. This is a 5-minute chart where right of the vertical line is today's activity. What we're going to do is urge you to pause the video, read the notes, go back to the chart, and double check the work. I'm going to highlight a few important things. 568.85, of course, is that gap that we talked about. That was the gap left open from the prior day, yesterday. And of course, here's where they came up short of 565.17. They did it this morning. They did it again this afternoon. They keep coming up short. There's a reason why they have chosen, and everything is a choice, not to get there. Remember, pause the video, read the notes, go back to the chart, and double check the work. So here's what we've got today. This is 9 o'clock before the market opens. 568.35 is our pivot. It's close to the gap left open yesterday. That doesn't happen often, but it does happen. A pivot close to a gap makes trading a little challenging if you're trying to trade at or around and for the pivot. There's a gap right above. You kind of have to make a choice. But you could see here, moving the line down to the pivot, you could see where the market thought the pivot was pretty important. Here, here, here. You could see in this 5-minute chart, it went back and forth, up and down, and couldn't get through the pivot until later on. It tried all the way through here. But wait, there's more. Let's scroll up, see what else we have. So now, 9:15, still before the open, net. Here's what we've got. 568.35 up to 569.50 is a short opportunity if reached sooner than later. We have the flip side situation, and they didn't do that. Let's focus on the upside, 568.35 up to 569.50. Short opportunity if reached sooner than later. And you can see here, your pivot's in green. Here's your 569.50. They spiked it. They sold all the way back down. So any trader, and we did have traders in the live room that were short, any trader that was short from up here took a nice ride, nice profit in your pocket. All that was provided before the opening bell. Pause the video, read the notes, go back to the chart to double check the work. 568.35 is your pivot, still the pivot. There's the gap. All this stuff is in here on an ongoing basis as the morning unfolds. We're waiting on, we have patience for the numbers that we want to make a trade at, whether it's a short or a long. We have patience waiting for Mrs. Market to get to our place. It's all in here. Pause the video, read the notes, and do the work. Go back and double check the charts. See what happened after price was discussed at a certain time. It's very easy to validate all this stuff on the charts. It's very simple. Those that do typically become members. Those that don't continue watching the free videos. Here's another one that popped up in the live room. Today we had some traders take this one, GDS. What I said was a spike of 21. I put the line at 20.95. Could be 20.97, 20.96, anything like that. A spike of 21 was what was said. The low of day, 20.97. They made a new low in the afternoon, but this one doesn't count. This is the one we were talking about because we brought it up in the morning session. A spike of 21 should give you a bounce. Where'd the bounce go to? About 21.40. How about 20 cents on a $20 stock is 1%. How about 40 cents on a $20 stock is 2% on a scalp trade? How you doing? Anybody that's been in the scalp trading business for a while knows how you're doing with that. Now, what's going on over in Camp IWM? Little relative weakness today, down about 6 or 7/10 of 1%, $1.46. And you can see where they are now. They're in between the 20 and the 50 period moving average. Below the 20, she starts to give up the trend. Below the 50, she will give up the trend. This is a really important place right here. That breakup candle low is below the 50 period moving average. It is also the gateway into no man's land, where there's a gap down here and there's no guarantee they'll bounce it at the gap. Then you have a 100 period moving average that comes into view, and so on. They really need to stay above in order to make this thing and keep this thing into a bullish scenario. It's also going to be suspect and subject to the phony jobs number, and whatever the market does, it's going to do, and they're all going to go together. Either they're all going to get a huge lift, or they're all going to have a rug pull event. Spider, IWM, Qs, the whole gamut. It's an all the same market situation tomorrow morning. What do we have here with the folks down at the transportation department? All of a sudden, they're back inside that trend line. They just can't stay above. All the breakouts keep failing. It's interesting information. Where are they going to close the week? I'm going to be extremely interested to see if last week was another false breakout, even though they closed above it. We had false breakouts here, but they only closed above it a couple of other times, and they're right back inside once again. It's interesting information. The trend is still your friend. Weekly chart trend, still up, no doubt about it. Above all the moving averages, trend is your friend. Daily chart, you could see the trend turning all of a sudden. It's not the same as the weekly chart. Close the week down below the 50 period moving average on the daily chart, and we're going to start to say that the daily trend is no longer up. It's no longer your friend. Maybe your shit got thrown out the window. By the way, I have to circle back to a 4-hour SPY chart. I forgot to show you something that was in my notes. This down candle, this big time breakdown candle, what you have now is below the 20 period moving average, they're basically doing the Macarena down here, building a bearish flaggish type of situation. Now, there's your flag and you got your pole as the breakdown candle, but obviously anything goes after the phony jobs number. They can break it up or break it down, but I just want to point out what's been going on from a 240-minute chart perspective. Can't really see it on the daily chart. The daily chart is just kind of edging down into that area. Yes, on time type of situation. So are we going to failure of a 240 chart bearish flag? Are we going to in favor of the daily chart pullback type of situation, rising or staying above? I shouldn't say rising, staying above all the moving averages above the 20, which is rising. What about the Q people? Anything material happen here? They were down 36 cents today, 7 bips. We're not going to make heads or tails out of that. We're not going to make a federal case out of that. What we're going to do from that is just simply move it along. They're above all the moving averages. Trend is your friend. On-time type of situation, just like the spiders, above all the moving averages. We'll leave it at that. Still going to be subject to the phony jobs number, and whatever happens after that, all the markets are going to go together. Any hints from the financial complex, the XLF? Well, they're still riding the 20-period moving average. Now they're below it. Riding it above is bullish. Riding it below is not so bullish, but it's not really bearish. You look at the weekly chart and you say, well, what's bearish here? As long as they stay above the last breakup candle low in the sequence, 44.70, they're fine. 44.30 is the next number down in the sequence. Are they going to be subject to the phony jobs number? All the markets are going to go together. If you get a big rally across the board, you'll get the financials participating. If you get a rug pull event, the financials will participate. It'll be a big participation party, if you will. What about Smashmouth, the semi space, Philadelphia Semiconductors, SMH? Pretty good proxy for the tech space. And guess what? Up $2, 2.23 today, almost 1%. Pretty good proxy for the tech space. Is this something of a flare up in the air, a shot across the bow? Is this a bullish situation? Or did we just have the SMH up today and we shouldn't read anything more into it? Well, let's have it up today, not read anything more into it, and wait for the phony jobs number to tell us what's going on. And we'll trade, meaning we inside the numbers and live room members, will trade the reaction from the phony jobs number. We've done it before. We'll do it again. Tomorrow's another one of those days. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.